Long-term care is the care provided to folks who have need for assistance with activities of daily living due to chronic illness or cognitive impairment. It's different than regular health care, and it's not covered by Medicare. It would be covered by Medicaid if you had no resources, but it's chronic long-term care. Private long-term care insurance has been around for about 20 years. It's the private industry solution to paying for the long-term care that would normally be paid for by individuals' own life savings. So it protects somebody's nest egg from a spend down where they would ultimately use up all their assets if they had to pay for long-term care for a period of time. It covers all the needs for an individual: custodial care, bathing, dressing, toileting, transferring, light housekeeping. Most of the long-term care benefits are typically paid for in the individual's own home, but it also would pay benefits for assisted living facilities, Alzheimer's facilities, and nursing homes. The average age of folks buying long-term care insurance today has come down significantly over the last, say, 10 or 15 years. Most people who are still actively working should look at it seriously, and many employers are now offering it as a group benefit, including the federal government and New York State. It's part of their benefit program. But if you wait until you're much older, there are two issues that you have to deal with. The price of the insurance is based on your age, and also the health when you apply for it. Many times we see people wait too long and they have serious changes in their health and then they don't qualify for the insurance. So we try and encourage people when they're doing their regular financial plan with their financial planner or their CPA or their attorney, when they're doing an estate plan, to look at long-term care as an option. That's a great question. The age range is probably, you should consider it as early as 45 and all the way up to, we've actually sold policies to folks in their mid-80s. Really, it's a function of affordability. No, actually, people who wait until they're 65, many people who actually go through the process say, I should have done this 5 or 10 years earlier, would have been a lot less money. In terms of folks who, in terms of their financial situation, it's usually not applicable for folks who have minimum resources because they could easily qualify for Medicaid. Folks that are very wealthy very often decide to self-insure with their own resources. But ironically, the very wealthy and the small business owners typically buy long-term care insurance because they understand the value of transferring a very large risk of possibly $1 million of cost and care for a small premium. So let the insurance company take care of that risk. I think the most important thing is to have a very frank conversation, first with your family, especially your adult children, then talk to your financial advisor or your CPA or your estate attorney to ask their opinion. And then if you're going to seriously look into it, you really want to reach out and talk to a specialist who really focuses almost exclusively on long-term care.